Hey everyone, it's I, and welcome back to the Investors Community channel. Today we're diving deep into the world of artificial intelligence and analyzing one of the most talked about players in the game, Palantir Technologies. This company has been making waves in the tech world, but its stock price has been on a roller coaster ride. So, will Palantir skyrocket to $100 a share, or are we headed for a massive crash? We'll break down the key factors driving Palantir's growth potential and the risks that could send its stock price tumbling. If you enjoy our content, be sure to hit the like button and subscribe for more valuable insights. Alright, let's be real here. Artificial intelligence is not just some futuristic fantasy anymore, it's transforming industries faster than we ever imagined. And guess what? Palantir is right in the thick of it. Their artificial intelligence platform, or AIP, is like the holy grail for governments and big-time companies looking to make smarter decisions with mountains of data. We're talking about analyzing complex patterns, predicting future trends, the kind of stuff that gives you a serious edge. Now this is where it gets interesting for investors like us. Palantir's AIP isn't just some niche product, it's got the potential to be huge. Think about it, governments around the world are pouring billions into AI, and Palantir already has a foot in the door with its track record. The demand is there, and if Palantir can keep delivering the goods, we could be looking at a revenue explosion in the coming years. But hey, I'm getting ahead of myself. Let's dive into the specifics and see what's really fueling Palantir's growth story. Now, let's talk about Palantir's bread and butter government contracts. This is where they've really made a name for themselves, especially with the US government. We're talking about serious money here, with the US defense budget projected to hit a mind-blowing $1 trillion by 2031. And Palantir, my friends, is right in the sweet spot. They've become a key player in providing data analytics and AI solutions for national security, intelligence gathering, you name it. And let me tell you, these government contracts aren't your average deals. We're talking long-term agreements with recurring revenue streams that provide a level of stability most companies can only dream of. This is huge for Palantir because it gives them a solid foundation to build upon. While other tech companies are chasing the next big thing, Palantir has this steady stream of government cash flow, allowing them to invest heavily in research and development, expand into new markets, and weather any storms that come their way. So, yeah, these government contracts are a big deal, and they play a crucial role in understanding Palantir's potential. Alright, so Palantir's got the government contracts locked down, but they're not stopping there. They've got their sights set on a much bigger prize, the enterprise market. Now this is where things get really interesting. For years, Palantir's focus was primarily on government work, but they've realized that their powerful AI platform has applications across a wide range of industries. We're talking about everything from banking and finance to healthcare, manufacturing, even retail. The possibilities are pretty much endless. And the best part? Palantir is specifically targeting small and medium-sized businesses, or SMBs. Now you might be thinking, why SMBs? Well, here's the thing. SMBs make up a massive portion of the economy, and they're constantly looking for ways to leverage technology to improve their operations and gain a competitive edge. Palantir sees this as a golden opportunity. They're offering their AIP platform as a way for SMBs to level the playing field and compete with the big boys, and let me tell you, the demand is there. SMBs are hungry for this kind of technology, and Palantir is ready to capitalize on it. Now let's talk about the bottom line, profitability. Because at the end of the day, that's what matters most to us as investors, right? And the good news is that Palantir has finally cracked the code. They've achieved profitability, and not just a one-time fluke, but sustained, consistent earnings growth. This is a major milestone for any company, but especially for one in the tech sector, where growth often comes at the expense of profits. Palantir's ability to generate profits while still investing heavily in its future is a testament to its strong business model and the growing demand for its products and services. This sustained profitability growth is like music to investors' ears. It shows that Palantir isn't just burning through cash, it's building a real, sustainable business. And that, my friends, is what separates the contenders from the pretenders in the stock market. So, yeah, profitability matters, and Palantir is delivering on that front. Alright, now let's address the elephant in the room over valuation. Because let's be honest, Palantir's stock price has been on a tear, and some investors are starting to wonder if it's gotten ahead of itself. One of the biggest concerns is Palantir's price-to-sales ratio, or PS ratio. This metric compares a company's market capitalization to its annual revenue, and is often used to gauge whether a stock is overvalued or undervalued. Now, Palantir's PS ratio is significantly higher than the industry average, which has some investors worried. They argue that the current stock price is already baking in years of future growth, and any hiccups along the way could lead to a sharp correction. Now, I'm not saying that Palantir is definitely overvalued, but it's definitely something to keep an eye on. High valuations can be justified if a company is growing at a rapid pace and has a clear path to continued success. But if those growth expectations aren't met, the stock price could come crashing down. Chapter 6. Intense competition. Let's face it, the AI market is hot, and everyone wants a piece of the pie. This means Palantir is facing some serious competition. And I'm not just talking about small startups. We're talking about tech heavyweights with deep pockets and a track record of crushing the competition. Companies like Microsoft, Amazon, and Google are all investing heavily in AI, and they're going after the same markets as Palantir. This intense competition poses a real risk to Palantir's growth trajectory. They're no longer the only game in town, and they'll need to fight tooth and nail to defend their market share and attract new customers. Now, competition isn't always a bad thing. It can foster innovation and drive down prices for consumers. But for Palantir, it means they can't afford to rest on their laurels. They'll need to keep innovating, expanding their product offerings, and proving to customers that they're the best choice in a crowded market. Chapter 7. Reliance on AI spending. Here's the thing about Palantir. Their entire business model hinges on one crucial factor: AI spending. If businesses and governments continue to pour money into AI, Palantir will likely thrive. But what happens if the AI hype fizzles out? What if companies start questioning the return on investment of these expensive AI projects? That's the billion-dollar question, and it's a risk that investors need to consider. If AI spending were to slow down, even temporarily, it could have a significant impact on Palantir's revenue growth. Now, I'm not saying that AI is going away anytime soon. In fact, I believe it's here to stay. But the pace of adoption and investment is uncertain, and that uncertainty creates risk for Palantir. So while Palantir is well positioned to benefit from the continued growth of AI, investors need to be mindful of the potential downside if those growth expectations aren't met. Chapter 8. Retail Investor Volatility. Now let's talk about a unique aspect of Palantir's investor base: retail investors. See, unlike many other tech companies, a significant portion of Palantir's shares are held by individual investors like you and me. Now, on the one hand, this can be a good thing. It shows that there's a lot of excitement and enthusiasm for Palantir's story. But on the other hand, retail investors tend to be more emotional and less disciplined than institutional investors. They're more likely to buy or sell based on hype, fear or FOMO, fear of missing out. This can lead to wild swings in Palantir's stock price, making it more volatile and unpredictable. Now, volatility isn't inherently good or bad, but it's something that investors need to be prepared for. If you're investing in Palantir, you need to have a strong stomach and be prepared for some ups and downs along the way. Don't let the fear of missing out or the fear of losing money cloud your judgment. Make informed decisions based on your own research and risk tolerance. So there you have it, the good, the bad, and the potentially ugly of Palantir. It's an exciting company with a ton of potential, but it's not without its risks. The future of Palantir's stock price really comes down to a few key scenarios. In a bullish scenario where Palantir continues to secure those juicy government contracts, successfully expands into the enterprise market and keeps those profits rolling in, we could definitely see the stock price blow past $100. But, and this is a big but, if Palantir stumbles, if they fail to meet those sky-high growth expectations, or if the broader AI market takes a hit, well, we could be in for a significant correction. And then there's the middle ground, the stagnation scenario where Palantir achieves steady but unspectacular growth. No major breakthroughs, no catastrophic failures, just kind of cruising along. In this case, the stock price could trade sideways for an extended period. So what's the verdict? Well, that's up to you to decide. Do your own research, weigh the risks and rewards, and invest accordingly. See you in the next video. Don't forget to subscribe to not miss out on more helpful videos.